Hello and welcome to Market View. Given the latest set of inflation numbers we've seen, Mr. Puri, your reading would be that it would be some time away for the RBI to start easing.
I think the RBI itself has been fairly clear on this. I mean, as clear as you would expect any central bank to be. I think it's there in the way that they are managing the key rates at this point, as well as in the messaging. Yes, absolutely. I think we are in an environment where I would not expect to see in the short term rates easing. I think the longer term, or perhaps even the medium term trend, will be to find an opportunity to start gently sort of lowering rates in the economy. But I think we're not at that point, certainly we're not at that point over the next quarter or two, for sure, in my view.
Do you believe, Mr. Puri, the worst is over for the rupee?
Well, I think that's going to depend on how what our next steps are. I think the ball is very much in our court. First, I would say that a certain amount of depreciation in the rupee was actually quite welcome. I think, when you do have a country running the kind of current account deficit that we have over a sustained period of time, and with the very stubborn levels of inflation that we've had, as you know, it's been close to 10% on the consumer price index. It is very hard under any sort of economic laws to understand why we would not have some amount of depreciation. So we were in a somewhat unhealthy situation in not really having a currency that was responding, if you like, to the structural stress that these two factors were bringing about. And I think the fact that the rupee has depreciated in that sense has already helped us achieve the rebalancing that was needed. And it's one of the reasons why a certain amount of optimism and confidence has begun to creep back in. Now, where we go from here is, again, not something to be taken for granted at all. I think the markets will continue to watch and judge whether or not we can actually build further in terms of creating the momentum, the investment momentum that we critically require now to get us out of this hump of being stuck in a 4 to 5% growth rate. And I think if we are able to do that, and that's something which the measures are being talked about, which is first let's bring some macroeconomic stability back, and then let's start to create an investment climate once again, where not just global investors but our own local entrepreneurs, who have, of course, been sitting on their hands as regards investments, will believe that we have a policy environment where they can come back into the market. To do that, we have to first allow the stranded capital in the system, whether it's in power or other sectors, to actually start generating some kind of return. I think those policy interventions have been well outlined and much discussed. I think we know what needs to be done there. But if there is some signs of life and some signs that the sort of dormant capital that we have, and the latent, if you like, power that capital has is put to good use, we will start to see fresh capital flowing in as well. If that happens, I think we have a chance of avoiding another bout of volatility in the rupee. I don't think we have an indefinite amount of time to prove this to ourselves and the world. And given the amount of global instability, it will take relatively little to once again cause people to believe that we are incapable, if you like, of taking these steps. So I'm, for one, very happy to see that at least the finance minister and a few others in the government are going out of their way to reassure the world that we are indeed committed to taking those steps. And I think if we start seeing breakthrough actions on that count in the next 2 months, then we could possibly avoid volatility in the rupee. If not, we are inevitably, I would say, inevitably going to see another fairly serious bout towards the end of the year when tapering once again kicks in.
Hello and welcome to Market News.